You must have often noticed in the market that when the price rises on the chart, you take a trade in that direction. The market also continues to move along with your trade. Yet, your option premium shows only a minor rise compared to the spot price or, instead of rising, even falls, leading you to unknowingly face losses. For an intraday scalper, this can be a highly risky situation. That's why, in today's video, we will understand how to scalp by analyzing both the index chart and the option premium chart, and how to place trades aligned with the momentum of the premium. Let's dive in, but before we continue, if you find this content valuable, hit that like button, and if you're new here, don't forget to subscribe and enable notifications so you never miss our latest videos. I'll see you right after the intro and disclaimer. First, let's break down why and how option premiums move upward. For this, we'll consider the Nifty 50 as an example. Nifty is composed of 50 stocks in total. Whenever the value of these stocks goes up or down, the Nifty 50 index reacts accordingly. Since an index itself cannot be directly bought or sold, we trade through its derivatives, that is, options. Now, when the value of these 50 stocks rises, it impacts the Nifty index, pushing its price higher. As the index climbs, the option price also moves up. Option Greeks further influence whether the price of a particular strike option rises or falls, as they indicate the extent of movement for that option's value. Still, you may have observed that option premiums sometimes climb faster than the Nifty index, and at other times, they barely move. Alongside Greeks, the demand from buyers and supply from sellers at a given strike also plays a major role in the option's price movement. This is what drives the momentum in an option premium upward or downward. For an option buyer, profits are only possible if there is momentum in the premium. Without it, no matter how precise your entry is, the trade won't yield profits. Hence, if you are scalping as an option buyer, you must monitor both the index chart and the option premium chart at the same time. This is the only way to consistently be profitable. By doing so, you can capture momentum exactly when it begins. Now, let's explore the technique to determine whether an option premium will gain momentum without relying on any indicators. Right now, in front of you is a 3-minute time frame chart of an index, where the price is breaking its day's high and moving upward. On the right side, you can see the call option chart of the same index with the ATM strike price. If you draw a line from the high of the first red bearish candle on the index chart, you'll notice that the high of this candle is broken by the third green bullish candle. Meanwhile, if you draw a line from the corresponding red candle on the option chart, you'll see that the second green bullish candle has already broken this high. This shows a strong bullish sentiment in the market, with buyers purchasing this option in large quantities at the rising price. The high interest is driving the option premium to gain significant momentum, even alongside the rising index price. With increased buying pressure on this option, premiums are moving up quickly, indicating a solid bullish trend in the market. If you observe the size of the candles on the premium chart compared to the index, the premiums are climbing rapidly, forming large green candles. Entering this type of trade reduces the likelihood of hitting your stop loss. To assess an option's momentum, carefully examine the premium chart and look for any discrepancies in movement. You can measure momentum by drawing simple horizontal lines or by noting the size of the candles on the option premium chart. No other indicators are necessary. For example, the price made its first breakout on the index chart, and simultaneously, the option premium also showed a strong breakout. The price broke out again, and the premium followed suit. This indicates consistent price momentum, which keeps the trend strong. You can scale your position during this upward trend and hold for a target to maximize profits. However, if you draw a horizontal line from the high of a bullish candle, the wick above this green candle appears similar on the index chart. On the options chart, the wick above the corresponding second candle is noticeably smaller. This signals a decrease in market momentum, causing option premiums to rise at a slightly slower rate. In such a case, you can either exit the trade completely or reduce your position by half. Since we are trading based on the candles forming directly on the chart, no indicators are needed. Similarly, by observing the premium chart candles in the market, you can easily judge whether the option will gain momentum. Now, let's examine an example on a live chart. This is a 3-minute time frame chart of Nifty 50. Until market close. Below it, you can see another 3-minute time frame chart. This is the call option chart for the 24,800 strike. If you observe both charts carefully, you'll notice that from 12 o'clock to 1:40, the candles on both charts move almost identically. For example, while the index chart experienced a breakout, the premium chart also showed a breakout at roughly the same time, indicating that the spot price and option premium were moving in tandem. However, at 2:30, the index chart reached a nearly identical high, forming what is known as a double top. At the same moment, the option premium started moving downward instead of rising. This indicates that the momentum in the option premium had completely disappeared, resulting in a steady decline. By 3 o'clock, the index again reached the same high, but the option premium continued to fall. Since option buyers had shown little interest in purchasing this option since 1:40, the market saw a steady drop in premiums due to reduced buying pressure. Additionally, traders who had previously bought this option began exiting their positions to book profits, increasing selling pressure. Therefore, if you notice any changes in candlestick patterns or a drop in momentum on both the index chart and the option premium chart, take note. At such times, you should avoid buying options, because unless there is active interest from buyers driving the option premium, momentum will not build. To assess whether an option has momentum, you can easily compare its premium movement to the index chart by marking key levels on the index. If both show similar momentum, it's a signal to buy. If momentum has weakened, understand that this option is no longer favorable for buying. This is why the market often shows prices moving upward, and seeing this, you quickly buy an option without checking its premium chart. After you enter, the index price may continue rising, yet the premium of your option fails to increase, repeatedly triggering your stop loss. Many traders face this exact issue, but if you start paying close attention to the subtle details visible on the chart, you can avoid it entirely, without relying on any indicators. For example, if you track the Nifty index and the 246 call option from 9 a.m. to 12 p.m., you'll notice something interesting. Around 10:30, the index chart shows a breakout. However, at nearly the same time, the 10:20 candle on the option chart has already broken its previous high. This signals that the option currently has stronger momentum compared to the index, which is why premiums are rising at a faster pace. A significant number of buyers are entering at higher prices, creating strong demand and accelerating the premium's growth beyond the index movement. The speed of an option's rise depends not only on the Greeks but also on the volume of buyers and sellers trading that strike. More buyers create strong upward pressure, while more sellers create downward pressure. Therefore, before entering any option trade, whether buying or selling, always check if the premium is moving in sync with the index price by comparing both the index chart and the option premium chart simultaneously. That's it, traders. Thanks for watching this video. Keep going until you're proud of how far you've come. If this video helped you move even 1% ahead, don't forget to hit that like button. And if you're new here, make sure to subscribe. Your journey begins today. I'll catch you in the next video.